Welcome, ladies and gentlemen. My name is Brad Matheny. Today is March 25th, and I'm coming with some very exciting news. My custom research and custom indexes have indicated that we are about ready to see a 12, well, let's call it an 8.5 to 12% bump upward in the SPY over the next 6 to 8 plus weeks, and potentially a 20 to 25% or more bump in the NASDAQ and the QQQ. How do I come to these conclusions? Well, I believe that the markets are shifting away from these complacency moves. I believe the Fed acting the way they are as a global lender of last resort is going to prompt a shift in global capital, which is going to cause a rush for foreign investment and foreign capital away from risks into U.S. dollar safety and U.S. market safety. And I am getting a lot of positive triggers in technology, in biotech, in healthcare, in the QQQ, and in innovation. So now what this means is that we are going to likely see a very strong upward rally in the NASDAQ and the SPY over the next 7 to 8 weeks. Everything that I've been telling you about this 425 to 435 target area is coming right now. In my opinion, it's happening. It's going to set up. There's nothing we can do to stop it. It is a flight to safety. It is basically traders running away from global risk and moving into U.S. dollar safety and U.S. asset safety. Then we were going to likely move into a sideways channel. Let me move this over here if I can get it. There we go. Bring to front. Visual order. No. Then we are going to roll into weakness. Once this move happens, and this is going to be a short-term flight to safety, okay, and then we're going to move into a fairly broad unwinding, which will likely see capital move away from these technology sectors, kind of stall out and stagnate, likely moving into metals, likely moving into large cap and possibly industrial type sectors away from some of this bubble. Now, I could be wrong. We're going to play it out here, but May, June, July are typically much weaker months. So we're not expecting anything to continue to trend in May, June, July. I don't believe, well, of course, unless the Fed shifts. If the Fed drops into a weakening stance instead of a raising stance, or if there's some catalyst event where the Fed kicks in a drops rates to say 2.5% from where they're at right now over the next 4, 5, 6 months, yeah, we could see something really unusual take place. But I am expecting, this is again a weekly SPY chart, I am expecting the markets to stagnate into a kind of a sideways channel. And I'm going to draw this in a manner that you can hopefully understand. Into a sideways channel, kind of like this, into July 2024. So in reality, we have a rotated rectangle. We have a zone kind of like this to the upside. That's actually a little too big. We have a zone about like this to the upside, and we have a zone equally to the downside. Come on, mouse. Clone. I gotta rotate it, so I'll just draw a new one. Equally to the downside right here. I'll carry it out a little bit. And essentially, ladies and gentlemen, this is our zone. And this is where we're likely going to see price continue to zone out as the Fed attempts to continue to consolidate global contagion risk. I do believe the Fed will settle risk. I believe the global central banks have the capacity to deal with the unwinding of global central banks and the real estate market. I believe it's natural. They want to see the real estate market globally kind of contract. That's going to lead to a wave of foreclosures. It's just the way it is. It's going to lead to capital contractions in at-risk areas and global markets. That's just the way it happens. But it's also going to lead capital that is functioning within the economy to move to safety and to find opportunity. And I think there's a ton of opportunity, particularly over the next 60 days in technology. And that's the whole purpose of this video, to tell you that I believe a massive technology bump is going to take place. This right here, I believe a massive bump in technology and innovation is going to take place over the next 60 days. I believe the SPY is going to rally more than 8% higher. That's this yellow line. Let me move off here so you can see it. The SPY is going to rally more than 8.5% to about 425, 435, and the QQQ is likely to rally from where it's at right now. I'm going to try to draw it again right down here, up about 20, 25%. So let me draw this because it's going to seem ungodly, but right up here, 14, 20 to 25%. We'll put us right in this area. And I'm going to actually draw this from these lows because I want you to be aware that this high will likely become critical resistance overall. And this is our target. And this is our lower channel. So I'll draw this across here. And then this would become our upper channel if my prediction comes true. Our upper channel would be here. And we would have those same rectangles that would allow us to determine ranging. Hypothetically, something like this. And hypothetically, something like this. Going out to the future. And these would be our zones. So hypothetically, what I believe to happen, draw right here. What I believe is likely to happen is we are going to see a rally up over the next 60 days up into this area below that this previous red line right here. It's going to be a 20 to 25% upside move rolling over into, and this is actually drawn incorrectly. Let me try again. I'm going to draw some vertical lines on some dates that I believe are very important, which is going to be end of May here, followed by the end of June, July, end of actual July, into early August base. So here we go. This is much better. So in reality, ladies and gentlemen, this move is going to be very quick. It's going to be right here. Then we come down. So from this area here, it's going to rally up. You're going to stall out into this area, and we're going to come down into a zone back over here trying to base. And that is what I believe is likely to take place. Let me try to pick a better color. Likely to take place. So you've got right now, in my opinion, an excellent opportunity to take advantage of this technology bump that I've been telling you about. And I believe this is setting up right now because the Fed is actively engaged in trying to prevent a global banking crisis. In doing so, capital is going to be seeking safety and security And I believe that individual traders and institutional traders are going to take advantage of undervalued technology, innovation, and NASDAQ stocks. I believe that everything from semiconductors, the software companies, to Microsoft, possibly even some underlooked types of companies could see a massive rally phase, prompting a short squeeze, leading to my 425, 435 area on the SPY, and possibly leading up to this 370, 365, 375 area on the QQQ. I believe it's going to happen over the next 6 to 7 weeks. I think it's going to be very aggressive. I think it's going to surprise the heck out of people. And I don't believe anybody's really prepared for this right now. So understand that gold and silver will likely continue to rally over the next 3 or 4 weeks to my target. 2,200 for gold, 22 to 2,300 for gold, silver likely above $30, $31. But I believe that this late stage rally phase could stall gold and silver until we get into this phase here, which would be July, August, maybe into September. So gold, we take a look here. Here's my rally phase for gold. Again, this is weekly. You can see I've already drawn this out. And again, I'll draw the same time frames. I'll draw the May time frame here, May, June. So there's end of May. And here is early August. I've actually drawn this a little incorrect. We will draw this up like this. And then stalling out. And then possibly moving downward into July, August, September, and then beginning another upward phase. That's really the next opportunity here. Now, we may see gold move back down below 2000 into this 1980, 1990 area. But it may stall back out back over here in September, August, September, October before starting a real big rally area. My target area right over here, 22 to 2300, is a very solid target area. And I think all of this is going to coincide with global banking and commercial real estate collapse. I think you're going to see some real issues in Europe and in China and possibly in other areas of the world with regard to overinflated commercial real estate and debt liquidity issues. So understand that we're looking at, maybe 2 to 4 months worth of a crisis event having this unwind, which may lead to multiple bankruptcies. But I believe gold's going to move higher, NASDAQ's going to move higher, silver's going to move higher, SPY is going to move higher. Then we're going to get into this malaise. And this malaise, this little sideways, let's call it from basically here to here, March 2024, it's actually going to go way out even further. But gold will likely continue to move higher, so I'm just going to leave this here. The reason gold's going to move higher is because of the presidential election and the uncertainty that's going to come with, what is the real unwinding of the massive debt bubble that's taken place and what are the policies that are going to be in place. We can't go back to, just handing out stimulus checks and prompting massive inflation. The real reality here is an unwinding of excesses, a destruction of liability through normal bankruptcy processes, and that will give us the opportunity to actually grow. But what's happening right now, ladies and gentlemen, as I mentioned to you, is we have got a huge opportunity right over here in the QQQ. You've got a massive, get rid of this little dot, massive 20 to 25% rally phase taking place. This is going to break out, and you can see the accumulation already starting to take place right here in this volume. So get ready. You literally have a support level right here that must hold, and you have this attempted rally phase up here to 362, 365, and I believe it could come very quickly in a matter of maybe 5, 6, 7, 8 weeks. We could be up above 340, 350 on the QQQ. All right, guys, that's your hint for this week. If you're not following my research, come visit MENT.com, see what I do, understand. In fact, let me see if I have the website here. I do. I'm just on a different page. Come to MENT.com, share my research with your friends, tell people what I do, learn about my research and how I help you, get started with my 60-day trial. My goal is to help you become a better trader. My saying is, I do the research, you make all the decisions. So in the reality, what I want to try to do is give you the insight that I see so that you can make better informed decisions and profit. And if that's helping you, then it's worth the $50 a month that I'm charging to continue to give you this insight and share with you what's actually going on. Remember, I have all kinds of tools and research available for you. I do these videos on an ongoing basis to try to help you, and they're available free. Some of them are free. Some of them are member only. The Expert Growth membership is very inclusive, includes everything for one low price. And like I said, you can get your 60-day trial for $34.99. Gives you a full 2 months to try to profit from what I'm trying to tell you what to do. And in fact, right now would be an excellent time to get in and try the 60-day trial because of this technology bump that's taking place. So get ready. I'm going to put my research and my skills on the line here and tell you that technology is about ready to rally at least 15 to 20%, in my opinion, over the next 6 to 8 weeks, maybe a little bit longer. All right, guys, talk to you soon.